Hello, folks. Welcome to State of the Market. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone today. Today is Monday, December 1st, 2025. And our webinar today is titled, Is a Santa Rally Coming After the Bears Retreat? And last week was interesting. The price action we've seen for the last, I'd say 7 to 8 trading days is very much consistent with what things are like in a bull market when they get pessimistic and people get bearish and there's a lot of negativity, and then it doesn't amount to very much of anything. I think that's what we're really seeing. So let me show some standardized returns, some ETFs. Let's see if I can make that go away. All right, sorry. State of the market. Here we go. So basically, wanted to show you guys here. These are the standardized returns some ETFs we're going to be talking about. Now, remember, if you go to tradestation.com and you roll down the page, you can see our blog post is, a lot of the material we're going to be covering is covered in the blog post with the Santa Claus. So you do standardized returns. And then we go over here to my blog post. Let me make it come up. Here we go. Tradestation.com, roll down the page. Is a Santa rally coming after the Bears retreat? So you can check that out. I also want to just mention that one of the big things here is the kind of flip flop we've seen in the CME Fed Watch tool. This at one point was like 90% for a 25 basis point cut. It went down to something like 30%, 35%, and now it's back close to 90. So it just kind of shows that we had a bunch of drama in the last few weeks about interest rates and the Fed. So overall, when we look at the big picture that I think is worth noting is that fundamentally earnings are strong here. There's been a lot of evidence of strong earnings, however way you kind of want to look at it. And that continues for several quarters into the future. If you actually look here, there's something we mentioned in FactSet. It was in another piece I wrote, but there's something about FactSet showing record, not record, but fastest revenue growth in several years, expected to remain strong for the coming quarters. So, the first quarter earnings are supposed to slow a little bit in growth, but then return to double digit later next year. And then I think at the end of the day, what do we have? We have basically an AI crash. We look over here on some of the things like the key ETFs. You can really look in the last month, the AI crash. You can see it here with technology in the last month being weak. But what happened in the last week? It got strong. So basically, what we saw the AI crash only go so far, and then it basically ran out of juice. And now we're in a spot where the selling has happened and there wasn't that much downside. And I think we also have a sense, when you look over here at the Fed Watch, we have a sense that there is dovishness coming. It's not super clear how much. There's all this talk about Kevin Hassett becoming the next chairman of the Fed, or at least being the nominee of the White House for the next chairman of the Fed. All those things are, very much speculative at this point. But there is a general expectation that the Fed is going to, is likely pushing in a more dovish direction. So I think that's important to realize. Now, there are some little cracks right now that people are aware of. I think the main thing happens in the bond market. So I'm going to get to that. But first, let me take a really fast look at the S&P 500, because I think right here as we speak, here's my trading view chart. The most important thing I want to just mention is we have essentially some levels here. If you look at the low from basically on October 29th, this is a very important day. October 29th was the day that NVIDIA hit 5 trillion market cap, and it basically was a bearish outside day. And look at that low that was right at 6852. 6852 was the intraday low on that candle. And then we basically got stuck below it. You see how we hit resistance there? Failed. Hit resistance, went lower. Now we're back consolidating near that level. It's exactly where we ended last week, virtually a few points below it. We touched it. We're sitting there. So I think right now we also have to realize there is a level that goes back to mid-November, that last Friday of mid-November, around 67.75. So if you look, it was near that high on that big ugly day on the 20th, the day after NVIDIA reported earnings. It was also near a high on the Tuesday here. So I think right now we essentially have a spot where 67.75 to the downside, 68.52 is a range that's emerging. Now, another thing I have on this chart, this is a daily chart on TradingView. I have one of my customized studies, which is the distance from the 10-day simple moving average. Now, as you guys may remember, I use the 10-day simple moving average on the S&P 500. I find it a very important indicator, and I'm surprised more people don't use it. It only really works, in my view, on the S&P, but I find it invaluable, and its direction can tell you a lot. So look at how this was the 10-day. Once it starts falling, it has that sort of negative drag on the market. But what's really important here is this is a short-term overbought, oversold indicator. And you can see that actually the 10-day here, look at this distance we have. This was extremely high relative to the 10-day simple. You can see back here in like April and May when the market came off those huge lows, you can see at this point as the market was rallying, you had higher readings up around 3 or 4%. So that's the 1 day, like where are we today versus the 10-day? So, when that gets up to like 4%, that's like unusual by historical. I mean, it seldom goes up to 4%, and you only have extreme moments when the market is coming off extreme lows normally. The key thing is jumping up to a 2%. That was the peak in June, the kind of the peak also in October. So what does it tell us? It just tells us near term we were overbought. And that 10-day, that yellow line, as this indicator inches lower, it means we're getting less and less overbought. So my expectation or my kind of thing here that this might be telling us is that people might be looking for a period of 1 to 3 days consolidating in here as that 10-day, that rising yellow line catches up, and this indicator gets back closer to zero, and then we could look at that continuation. So ADP's payroll report is on Wednesday morning, and that's just a catalyst to kind of bear in mind. The normal non-farm payrolls report is pushed out. You might want to look at this article because we actually mention here how these economic events normally, the important ones got moved this week or this month. We continue to have some distortions from the government shutdown of events moving. So just realize that the payrolls report actually should be on December 5th, but it's on December 19th on a Tuesday, which is pretty crazy. And then we have that CPI moving from the 10th to the 18th. It's pretty crazy because next week we get PPI. So we actually get PPI way before, a week before CPI, which is like impossible under normal circumstances, but it's because of that shutdown. So just kind of remember that. So I want to just kind of point that out. But as we look in the near term, there are some slight risks I think we do need to kind of bear in mind. And one of those is that there is some upside happening with the with Treasury yields. That I think there is talk about issues with the Japanese yields. Not normally a big deal, and I think we have to realize here there are some issues here that to me are kind of we need to be aware of them, but like they don't necessarily have a huge negativity yet. But there are some signs right now of like some problems at the long end of the yield curve. The Fed is going to be dovish allegedly, and yields are moving higher. You see the similar things in Japan. So you look at the United States, Japan, and Europe. You have economies with large amounts of debt, and there's increasing signs that they are, having a degree of trouble issuing at the long end of the curve and borrowing. And the idea of the Fed cutting rates when inflation is still close to 3%, it could have that inverse effect of pushing yields higher at the long end of the curve. So there could be some sort of squeezes in volatility and people talking about liquidity issues. It's not something, in my view, that is really a clear thing that you kind of want to be betting on or being bearish or positioning for. But if we start to see yields spike a lot higher, just to be aware that it is a risk that's kind of lingering out there. So I'm just kind of pointing that out. It's interesting to look at the dollar also, the dollar index here. From my perspective, there are, this should be going lower. And I think this is also a potential risk. And I say when it should be going lower, what I mean is that what the Fed expects to be dovish. The problem is we're seeing some economic data in Europe. I think today German consumer confidence, some other stuff, not great for Europe, meaning not great for the euro, meaning potentially somewhat bullish for the dollar. So we have had this clear narrative of the dollar being weak this year, but this bottoming continues. And the news continues to kind of suggest the dollar might go higher. So there is some risk here of the dollar squeezing higher, interest rates shooting higher, the long end of the curve shooting higher. I think we have to recognize those as risks, but we also have to be careful of getting too nervous when the overall market has some, looks like some interesting kind of positive things happening. Now, before we jump onto the indexes, remember in this webinar, we look mostly at the index, but there are some interesting things happening, and that's the retailers. So if you look at things like the retail ETF, the XRT, and you look at things like Macy's last week and some of these other names, Ralph Lauren has been in a very interesting uptrend. I think it's just important to realize that some of these retailers, we actually talk about them in this article, Um, these are all companies that left the S&P 500. Kohl's, Urban Outfitters, Abercrombie and Fitch. These are all companies that are like kind of forgotten, but they all had strong earnings. And I think we have to just, this might be something people might actually see some rotation and some squeeze into. So I wanted to mention these names all left the S&P 500. They've all reduced their stores significantly, and the retail names have been through the ringer, and they're now showing some signs of a turnaround. And I think it might want to be on your radar. So it is mentioned in the article here. We mentioned these names here under metals shine again. So I did want to mention that. We are, of course, always, we have been mentioning this precious metals, but I do think that, here we have gold, silver continuing higher today and everything else. We just have to be careful, I think, to be of that trade, because from my view, I think that the main risk that could hit us here could be if we have a strong ADP report, meaning more jobs than expected, and you also have the weakness in the European economy and the dollar refusing to break lower. It could turn into something that is not amazingly bullish for metals. So it has been an interesting momentum trade. There has been this belief that the Fed is going to be dovish, but you have to be careful when something is widely assumed and expected, because that thing you're not expecting might come and bite you. And that thing could be weakness in Europe. And, I think right now, in many ways, a lot of the strength in precious metals results from the euro weakening in general, and the Europeans kind of like looking for, people moving away from the euro toward gold as reserve currency. But I still think we have to realize is that basically if we get a squeeze higher in the dollar, that might actually, you know, knock gold and silver down a peg. And we have to be careful on a Monday, because often what you get on a Monday is you get the kind of people coming in and saying, wow, silver, they over the weekend they say, I want to buy silver, and they come in and they rush to buy it on Monday morning. So I've noticed sometimes on Mondays you get these moves when you get the continuation of the previous week, and then Monday will often mark the high. So I think we just have to realize that is this metals trade, it might actually have a little bit of risk here in the precious metals. And I think we just have to realize that ADP report is out there coming. So just kind of bear that in mind. But the overall thing I think it's important about the S&P 500 right now is that we're starting to see other indicators get more bullish, like MACD has been turning higher. I don't have it on this chart, but I want to jump over here to my trade station, because one of the things I have on this chart, and we share this in our market trends, this shows that 10-day moving average, and it's just interesting. Now, this also shows the 10-day, but on the futures, and it's basically not the 10-day here because these are 4-hour bars. So I took basically with 4-hour bars, I use 54-hour length because this is for futures, right? So it has, I guess you have something like 5 or 6 or whatever bars per day. So I did the math, and basically this is what it comes out to. The key thing is look at how when the 10-day changes direction, you know, it's interesting. See, it changes direction and you get some bearishness. Now, as it comes up, you can see that it wasn't going to just rally through a falling 10-day. See, it had to come back down and kind of pay it a little homage, or kind of give it a little bit of acknowledgement. It had to kind of come back down and then turn it. But then if you look at it, it's very interesting to see how this behaves, because once that 10-day starts falling here, see, it's falling, it rallies back above, cannot hold. See, and then basically it gives an interesting direction. And when you look at the overall rally, you can see as well that in these moments along here, when the 10-day was rising, that basically you had these pullbacks that were great buying opportunities. So I did want to mention that here, because I think it's really important. The other level that's interesting here, and remember, this is futures. If you look at the high on October 8th, then this is the 6,800 on the futures. Look at how that's basically the level that we held today. It's also near that high back there in mid-November. So I think right now this level on 6,800 on the futures, and it was a little bit different on the cash index, but that level where we basically bottomed overnight and held this morning, I think is important, and I think people kind of pay attention to it. So turning back to the S&P here, I think it's really important to kind of realize that on the daily, this level basically, it's around 67.72, which today basically was 7,800 on the cash. This area here, I think, is people have to realize this is some potentially important support. You see, we can actually draw this level. You could extend this line back here to this level in early October. So from my perspective, this is now a significant area that was resistance. It's becoming support again. We're near-term overbought, but a lot of the other indicators are lining up in a positive direction. We also saw that the breadth turned positive, new all-time high in the advanced decline line in our chart here if you want to check that out. And also I want to point out that some time ago we did actually talk about the um, we did talk about this level down here at this low from October 10th. And that's exactly, I think 2 to 3 weeks ago, we did a blog post. We identified that October 10th as that low, and that's more or less the area that held. So I think it's important to realize that this is a pretty far established now as a new support level. So that's our support that held. Now we're up to this other support, and let's see what happens here, like I said. So I think overall, as you look at the situation and we look at where the we look over here on our key, well, I'm sorry, on our key ETFs, and we look at the performance in the last week, we can really see this rotation back to tech. And I think it's important to just kind of realize that because technology, obviously, it's a third of the S&P 500. That's where the big strength has been, and we have seen that rotation back to technology. And I think as we look now, as people look toward year end and everything else, the big story could be AI trade is bent, but it's not broken. And we have a pullback, and we have going into year end here with positive momentum. People might be kind of looking for the big stuff to come back together. And so let's look now over here one more time at just a few of the individual names I'm going to very quickly mention. One of those being Broadcom. It's interesting to see how Broadcom is holding this level here. Now, obviously, it's a major semiconductor company. Look at how it's holding this level from late October. I think that's important to realize. We did a trading view idea today on Taiwan Semiconductor, also in a spot here where it's it had this snapback and it's holding in a very tight sort of range here. Some other areas I think people might notice is it's interesting to look at what's happening in some of the semiconductor equipment companies. Like, for example, KLA Tencor, well, actually it's now just called KLA, but KLAC is a ticker, and Lam Research, LRCX, Applied Materials, AMAT, hitting a new all-time high when the chips are not. So what are we seeing here? We're basically seeing NVIDIA is becoming a little bit a source of funds. People are selling NVIDIA to buy other names. And the names that they're buying are those names like the CapEx companies like Applied Materials, Lam Research. Another thing that's interesting, we did a trading view idea on last week, is Intel. There's some talk about Intel having some potential, thing happening with Apple, but we did a trading view idea on it. So I think just overall, what is interesting to a certain extent is we're seeing some money shifting from from NVIDIA to everything else. So I think that's important to realize. And that might also put us in a situation people want to think a little bit more to the high beta names. Like, for example, IREN. This was one of these AI names. It was extremely, you had this extremely powerful run. It's been consolidating here, and now it's kind of holding. I mean, it's in a very volatile name, and the same is true of NBIS. These are names that have been very volatile, but they are holding now. And so people looking, I mean, they have short-term bearishness still. I mean, they're under the 21-day exponential and things like that. But the key thing is these are names that were very strong earlier in the year. They've now basically paused and pulled back to levels from 2 to 3 months ago. And people looking, to the end of 2026 might say, this is something that, the overall AI thing, if I want that, if I'm looking for that potential momentum, these might be areas where people kind of come back. So I wanted to put these on people's radar. But like the big thing here is that the narrative now may be an overall focus on tech, consumer discretionaries, and communications. The big three, as I call them, the big growth sectors might be where we look into year end. Now, here's the S&P on the weekly chart like we like to do in this webinar. And again, we're highlighting here that very important level of 67.75. And like overall, simply staying above it might be the only thing that really matters. In terms of the upside, what's interesting is last week we had a record closing high. So in many ways, we've talked about the signal a lot. Very often what we get with this signal is you get that record closing high, you get 2 to 3 to 4 days of consolidation below it, and then continuation. So I think that is actually something here that we're seeing here, and we're just seeing as long as this level holds, those things remain in effect. All right, now if we look on the Qs, very similar here. We basically went down, tested that level from that week in the middle of November, and sitting here and consolidating. This is very much the sort of thing that people might expect to see happen for a couple of days, and as long as it holds, that might actually be the kind of signal they're looking for. The Dow here is, in a similar sort of environment. The Dow remains this sort of strange, benchmark that I'm not especially sure what to think of overall, but it is holding above that level here. I mean, we saw a little bit of a dash to value last week. There was some strength in the healthcare we've been indicating. Eli Lilly very strong, some of the big pharma strong, but those have now extended. So people might actually see this as having some risk of just drifting sideways and filling through here and not giving very much signals or opportunity in anything. Now, the Russell here, I think, is interesting to note that it also had this big surge above these levels. I think the problem with the Russell, though, is that basically a lot of this was pricing in the most dovish scenario for the Fed. And so the Russell has issues with being sensitive to interest rates. And if the long end of the yield curve moves higher, this is one that may not behave particularly well. So I think people really on the Russell here might actually be saying, can we actually get a breakout to new all-time highs or a new weekly closing high and then get some continuation from it? And so from my view here, waiting for a new close above these levels might be what people are looking to do, and look to see if we can get a new closing high and realize that there is a risk of this getting sucked back in and just turning into a just a very chopping sort of setup with ranges here. And if yields move higher, that could be what people kind of see happening. So I think right here, this is something that's a little bit more of it has that sort of intermarket risk from the yields. So if we look at the yields here, the TNX, this is also something where I think people see that it makes these higher lows. And I think we just have to, realize that there are some issues here. If we look back to September of 24, when the Fed got dovish, the yields moved higher. And now here we are with the potential of a very dovish, chairman coming in the Fed and everything else. And I think we have to realize there is some risk here of this moving to the upside. And again, I don't want to be emphasizing it too hard, but if we get much above 4.25, there is some, people might start to get more anxious about this. So this is something I think you'll need to just kind of realize it's out there as a risk. So I think, the dollar index also is the next thing we look at. And, it's interesting to see the way that we are just refusing to follow through to the downside. And just, to me, this does remain, I mean, eh, when you look at the overall picture, the common sense conventional wisdom would be dollar goes lower, but it's not happening necessarily. So I think right now this is something also people need to realize there is a risk of the dollar squeezing higher here based on what we're seeing in this weekly chart. These candles, we go down to 99 and we bounce both times. We're holding above, I'm going to actually add another line. In fact, you know what? I'm going to just, this line, I don't care about anymore. Let's move this line over here now and let's look more like this. Okay, look at these levels that we're holding. Basically, it's the weekly close from back in October that we're basically holding above that weekly close. Um, I don't know. It's just something to think about. If we hold above 99 essentially, or that weekly close here, that is something which may create some upside risk. So just kind of be aware of that because it's not confirming the downside based on a lot of the basic things that you would be looking for. Now, the XLB, the materials sector, this is now in this range. You might look for it to work its way back up this range. There has been some strength in some of the steel makers. I think it's very interesting to take a look over here at things like Steel Dynamics, things like Nucor. These have been making some interesting sort of breakouts. Some of these Steel Dynamics is at a new all-time high. Also, stocks like ATI and CRS could potentially be on people's lists. And the other one is MT, the European. It's a giant European steel maker. We've talked about this at various times, and it's been in this kind of quiet uptrend. ArcelorMittal, that's XLB. Now, XLC, I think here is interesting. I think here the thing to look at on this is the fact that we have held this level from early September, and we're also in an area where we've seen a lot of downside now in things like Meta and everything else, and it has been holding. So if we do turn into this kind of end of year return to mega cap momentum sort of thing, this might be an opportunity that people actually see the potential for this to work its way back up the range and potentially make new highs. So from my view here, people looking at something like XLC, the main thing that's important is the fact that it has held that low and it's in a range and the overall weekly chart remains in a spot where the weekly uptrend, you know, seems to be intact when you look at it structurally. There's nothing here that really shows that this weekly uptrend has failed. Energy XLE is kind of interesting because of all the geopolitical things happening with both Russia and potentially Venezuela. I think this is just interesting to see how it is really refusing to back down. So from my view here, the thing to watch for could be a potential breakout up through these levels of 92 and a half up to 94. And that's kind of what I think people should, that's what people might be looking for, some reaction to see if it could get a confirmed breakout. There are these issues that are holding up energy. I mean, and the thing is, it comes down to geopolitics, but if they get worse before they get better, it could actually trigger some upside in energy. The other thing about energy is it is a value sector. And if yields move higher, people might look to energy as actually being a way to position in things that are low multiple, which is often the response when yields move higher. Now, the financials are just stuck in a range here. We had talked about this the 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 possibility of it revisiting this low from July when last did our webinar before Thanksgiving, and that's exactly what happened. And now it's in this absolutely meaningless range. And I think people just need to realize that this could be in a spot where it might depending on how things play out. Earnings season coming in January, people might wait for earnings season for this to break out. So just realize this is in a range here, and there's really no clear signal on financials here at all. And industrials are exactly the same way. Very tight range, and overall, people would often view a range like this, remaining high as being bullish, but it has not broken out. And waiting for that kind of breakout might be the thing that gives a clearer sort of signal. Now, technology XLK is it held that high from August. It looks similar to communications, has the constructive weekly patterns, and people may look here also for this to be similar to the Qs, similar to the S&P, basically a few days of weakness, holding above some levels. And in my view, the level that matters for this is actually the low from that last week, of full week of October, around 282, which we held today, and we're kind of holding. So from my perspective here, this is getting the confirmation. It holds that support, then it holds a higher support, and it may actually open the door. I'm going to just take away this line because I'm not sure it even matters that much at this point in time. With this spot here, people may look for simply, if we turn green on the week, momentum to continue to the upside in XLK. Consumer just staples here. These now may be facing resistance at this level right around here. You can see we got rejected there around 79 to 80. It was a level from back in July, and now we got rejected, and now we're back up to it. So then we got rejected there in October, and now we're back up to it. People might look for that now to be another resistance. Now, resistance on the XLP would be potentially bullish for the S&P because this is a safe haven, and usually when it struggles, the overall market does better. So that's something also to watch. If this actually fails here, it could actually be a positive signal for tech. XLRE. Let me just also, I mentioned the names I wanted to mention. Um, Taiwan Semi. Like I mentioned, the chip equipment names inside of XLK. I just had another note. All right. XLRE, real estate, absolutely sideways. And I think this is one where people, might want to be aware that if yields move higher, this could turn into a breakdown. So this is limping with the overall market strong. And this is something here where it's just range bound, and it may have some risk if yields actually do squeeze higher. So I think we realize here is that this lack of strength is something that could turn into not just a lack of strength, but an outright weakness and breakdown. And the utilities are the same way. The XLU here, I mean, they're not the same, obviously, because you're looking at something that made a new all-time high. But there is that risk of the yields, and there is that risk of this has broken out, but this is a sector that is something of a safe haven. It has that yield exposure, and so I think here this is something where it does have the patterns overall in the weekly here. People might see some strength in it. However, it does have that intermarket risk from yields kicking in and dragging it lower. So I think right here, people just kind of realizing that the bears could very well try and drive this back down deeper into these levels. For now, it's holding that August high, and maybe if we actually get an ADP report that is moderate, if we get yields turning lower, this could be a place where money does start to rush in because it is setting up in a way here that is, you know, potentially consistent with a longer term uptrend continuing. However, it might have more volatility. People might look for something down to these levels closer to 86 before they actually get want to commit. XLV, we had talked about how it had kind of, you know, had this intermediate term strength. Now it's at these highs. And from my view here, people, you know, may see the support, the line all the way through the record weekly closing high in that week of August up to that following week. This zone here may be an area where we simply need to consolidate the same way we did here. So people might look for this to consolidate for a few weeks, and that may give opportunities in some of these names that were so strong. Names like Eli Lilly. You know, maybe Eli Lilly kind of pulls back. You know, maybe set a price alert around 1,000. See if it gets down to 1,000. Things like Merck, things like Amgen. The other thing I think it's interesting about, well, you know, on Thursday we'll show you how to use the platform to track some of these for potential entries. If people are thinking in that direction. The last thing I want to cover is consumer discretionary XLY, and so this also is in a similar sort of spot where it had that false breakdown and held. You know, people might want to just see if we get a confirmed breakout to a new all-time high. This has, you know, some, you know, the structure here is potentially, in a positive sort of setup overall. But I think we also at this point, you know, it has not broken out, and it is, you know, stuck in something of a range the way financials and industrials are. So people might want to wait for a confirmation of the breakout in a name like this. Although it is interesting to kind of realize that you do have names in here like Amazon, Tesla, large cap growth. You have things like retail, which have been more strong. So I want to just kind of point that out. This is one also where people may kind of return as one of the big three mega caps. So we'll be back on Thursday for market trends. Hope everyone has a great day. Don't forget ADP on Thursday on Wednesday morning, and I'll see you on Thursday. Thank you very much.